Hello and welcome back to the channel, your go-to source for understanding the complex world of market mechanics. Today, we're diving deep into fascinating microcap stock that's showing up on our hard-to-borrow screener with some truly eye-popping numbers. We're talking about CIIT International Inc., ticker symbol CIIT. This isn't just about hypothetical scenarios, we're looking at real data for a real company to understand what makes a stock hard to borrow and what that could mean for potential short squeezes. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's get straight into it with CIIT International Inc. This company operates in the industrial sector, specifically within integrated freight and logistics. Through its subsidiary, Rushing International Company Limited, CIIT provides logistics services across Hong Kong, Vietnam, Japan, Zimbabwe, and South Korea, primarily focusing on ocean freight forwarding. With a current market capitalization of just $3.06 million, CIIT is firmly in microcap territory. Looking at recent price action, CIIT has seen a plus 2.20% move today, but it's done minus 1.59% over the last 5 days. However, zooming out, this stock has surged an incredible plus 447.20% over the last 30 days. Show chart of 30 DAY price action. This kind of volatility alone warrants a closer look. What is cost to borrow and why it matters? So, what exactly makes a stock hard to borrow? It boils down to supply and demand for shares that short sellers want to borrow. When you short a stock, you're essentially borrowing shares, selling them, and hoping to buy them back later at a low price. But borrowing shares isn't free. There's a fee called the cost to borrow, or CTB. This fee is paid by the short seller to the lender of the shares, and is typically expressed as an annualized percentage. The higher the CTB, the more expensive it is to maintain a short position. When this number starts to climb, it signals that fewer shares are available to borrow, or demand to short the stock is extremely high. Why the stock is hard to borrow right now. Now, let's talk about why CIIT International Inc. CIIT is on our radar. Our screener flagged CIIT with an astounding cost to borrow fee of 889.1% annualized. Highlight CTB number, let that sink in, nearly 900% per year. For perspective, a typical healthy stock might have a CTB in the low single digits. This extremely high CTB tells us that borrowing CIIT shares right now is incredibly expensive and difficult. While shares currently available to borrow are unknown, we know CIIT has an estimated flow of about 7.3 million shares. This relatively small float, combined with high demand from short sellers, is what's driving that astronomical borrowing fee. Squeeze mechanics explained. Why does this matter? For a short squeeze, you need the conditions where short sellers are forced to buy back shares to close their positions. When the cost to borrow skyrockets like it is for CIIT, short sellers are paying a hefty premium every single day to stay in their positions. If the stock price starts moving up, it's a double whammy. Their positions are losing money, and the cost to hold those losing positions is incredibly high. If borrowable shares dry up completely, or if the price continues to climb rapidly, it can create a scramble. Short sellers might be forced to cover their positions by buying back shares regardless of price to avoid even larger losses or unsustainable borrowing costs. This forced buying creates upward price momentum, which can trigger more short covering, leading to a squeeze. Dilution risk check. Before we get too excited, let's talk about dilution. Dilution is when a company issues new shares, which increases the total number of shares outstanding and can depress the stock price. Even with a high cost to borrow, if a company is actively diluting, it can negate any short squeeze potential by constantly adding supply to the market. For CIIT, our dilution risk check found no recent dilutive SEC filings like S-1s, S-3s, or 424 BS in the last 90 days. This is a positive sign for any potential short squeeze thesis, as new shares aren't actively being introduced by the company to counteract buying pressure. Recent reverse split watch. Another crucial factor for CIIT International Inc. is its recent reverse stock split. CIIT executed a 1-for-10 reverse split just 21 days ago, on July 20, 2026. A reverse split reduces the total number of shares outstanding and proportionally increases the share price. For example, if you had 100 shares at $1 each, after a 1-for-10 split, you'd have 10 shares at $10 each. This significantly reduces the float, which for CIIT is now an estimated 7.3 million shares. Historically, many microcap stocks tend to see renewed volatility or even a price pop within about a month after a reverse split, as the reduced share count and higher price can sometimes attract new interest or trigger specific trading algorithms. It's a pattern we've observed, not a guarantee, but it's important context for CIIT's recent activity. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, with CIIT, we have a microcap stock in integrated freight and logistics with an incredibly high cost to borrow at 889.1% and a relatively small float of 7.3 million shares, further tightened by a very recent reverse split. We also have significant recent price momentum, up over 447% in 30 days. Today's volume for CIIT was about 95,000 shares, which is only 0.2x its 30-day average volume of nearly 400,000 shares. Joe volume bars an increase in volume from these lower levels could indicate renewed interest. Remember, a high cost to borrow doesn't guarantee a squeeze. It can also signal that short sellers have very high conviction in their bearish thesis and are willing to pay a premium to stay short. It's about evaluating the confluence of factors. Keep an eye on the borrow rates, available shares to short, and any significant shifts in trading volume and price action for CIIT International Inc. CIIT International Inc. CIIT presents a fascinating case study in the dynamics of hard-to-borrow stocks. With its extreme cost to borrow, recent reverse split, and a history of significant price swings, it's a prime example of the kind of stock that can capture the attention of traders looking for volatility and short squeeze potential. Always conduct your own thorough due diligence. If you found this breakdown of CIIT and short squeeze mechanics helpful, please hit that like button, subscribe for more in-depth analyses, and let us know in the comments if there are other hard-to-borrow stocks you'd like us to investigate. Thanks for watching, and happy trading.